Testing, testing, testing. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. All right. What do we have? Gold to silver ratio again. An awesome tool. So much information to get from that. And I'm going to go through. I posted something on Gold Tent, StockTwits, Twitter. Each time we go down, each time we have a leg down in the gold to silver ratio, we know that it has a strong correlation with silver. Check it out. Correlation coefficient. So we know it has a pretty strong relation with silver most of the time. When it goes down, price of silver usually goes up. Knowing that, I'm going to go back. Daily chart. We're going to try to see every time we have a wave. Look at that. A wave of a sequence of a go down, up, down. How much are these gains on the for the silver chart? From what I've seen, there's a little premium. There's a little extra. So let's say we go down. Price range, date and price range. So let's say we break down here. So right here, all the way to the bottom. So for an 8 days, 6 bar move, for 6% move down, how much did silver get up? For the same period, right here, broke out. And for that 6 bar 8-day period, 52% gain. About 120% I've noticed on average, sometimes less, sometimes more. So if you have a 6% decline in the gold to silver ratio, silver is going to pop up about 120% more. You could do that over and over and over, and every time you have a breakdown, we're going to even see on average every time there's a leg down how many days usually we consume. So here's another 6 bars, 9 days, 10% down. Breakout here. Oh, a little off. 6 bars. 13% move, 10% going down here. So let's see, and you see 6 bars again, 8 days, 9 days. That's pretty much the time that it goes. So let's go a little back in time. Let's go 2016. We're gonna look at the times that went down when we had a monthly chart confirm the breakdowns. 2016, we had a short one. Let's go back. And here we are. Here's a little meltdown in the gold-silver ratio. Breakdown right here. So let's see. All the way got down here. So about 13 bars, 17 days, 8% drop. And let's see our silver, how much went up. 12% gain. There you go, let's move it here. 13 bars, 17 days, 12% gain. That's even a little bit more than 120%. So here we had a 2-week move, sideways move, waterfall. Ooh, down it goes again. Here's my little trend line. Same exercise, go down. When did it stop? I could even say here. So 11 days, 16 bars, and silver went up. A little off. 11 bars, 16 days, 15%, 10%. So over, it's even more than 120%. It's almost 150%. 6, yeah, 100, 130%. 11 bars, 16 days. So these are the moves that we could expect every time that we know that gold to silver ratio has a monthly chart breakdown. But what my curiosity, I want to go to the 2008. Here we go. 2009, 8, we got out. And every time we had a drop. And here was the big drop right here. That's what we're hoping to get. This, eventually we're going to get these 8 to 10 day drops. But eventually this is going to be when it's going to start going parabolic. When you see the gold silver ratio starting to do a crazy sequence like that on the daily chart, we're going to start being wary of the end of the that we're going parabolic, that we're approaching almost like a self-destruct of the bull run, where there's too much happening and it just has to stop, reset. 5 years, 6 years. So it could have started actually right there, right about now. So let's do this crazy move. Actually, we could cut it out in two. Right here, we're gonna go back above. So 83 bars, 122 days for 27% decline in the. And usually that's gonna coincide with. And that move. 122 days. 122 days, 83 bars, 56%. Wow. Almost 100% expected move. So the longer it lasts, this is really, you're going in hyperdrive. What we're having today, these two that I've isolated right here, these are very small, very embryonic. See, I thought we were doing 120%, 10% down, 13%. But when the moves really start accelerating, we're going to get closer to 130, 140, 150%. And this is a little above my expectations, but it's good to know that this is what is going to happen. And after that, you got even a second shot. You say, okay, this is the cookie's dead. And after that, the next time it decided to go down. All the way down here, break down below that horizontal breakdown line, that support. And let's see where our silver went. And that was the peak. The target now that everybody's looking at. 49 days. I'm not quite. No, I didn't start a proper place. $57 bars. So right here, 58 bars, 84 days, 31%. We did almost 100%. The gold to silver, that's how you could use a gold to silver ratio on the daily, looking at the how it performs every time there's those leg downs, right? This is like when your emotions are going to start riding wild. It's because you're going to have day after day after day of gold to silver ratio going down. Price action is going to keep going up at twice the pace. This is the what we're looking for, this type of move. But you have to accept that when you start seeing these type of ratios in between both, that we're approaching the end. But right now in 2010, we managed to tag along two of these scenarios where it really started accelerating and the profits really started going haywire. Whatever's happening now we're embryonic. This is just the beginning. This is more akin to let's go back to 2000, right before this crazy waterfall. More to these type of scenarios here when we're breaking down or going sideways right after 2009, right after we had our low. With the crash, the market crashed, and then we started going down. I think we're more in this type of situations here where until the markets really decides to go haywire, we're gonna have these shorter moves. Let's go do one. Zoom, 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 zoom. Remove. Shorter move, 18 bars, 27 days. And that gave me 18 bar, 27 days, 8% move down. Wow, 23% in gain. So still, the moves were really intense back then. Here's another waterfall going down below horizontal support to the bottom. Another 21 bars. Less lengthy than what we had in 2010, 2011. Price action. All the way here, 21 bars. And 10% for 23% again. Wow, it's over 100%. 100% gains we had back in this bull rally back in 2009, 2010, every time I identify them. So I'm using gold silver ratio on the daily chart, this waterfall effect. You know you're in a downtrend on the monthly chart. So all these, you could estimate targets once you start seeing consolidation patterns here. Next leg down, and then you see the move going up here. So look what you're having closer, and I'm going to start observing when we start getting accelerations in the percentage gains versus the decline in gold silver ratio. I'm going to keep an eye out for that. So this is very promising. We're underperforming what we've been doing at the previous bull cycles, and I think that, let me put the monthly chart for silver. That's going to probably coincide when we're actually on the monthly chart, that when we're going to be breaking out above our super duper 2030 monthly defined breakout line right here. And then we're going to start probably accelerating. So right now, we're just turning the corner. We're just starting to get momentum. And once we get out above and we'll get more eyes on us on the silver, this could start accelerating, and we're going to get more of these moves right here. All right. So another tool in your tool shed to try to estimate targets and anticipate and try to notice those legs down on the gold silver ratio on the daily chart. That's it, guys. Thanks for watching. Ciao.